this hearing, and I once again I applaud you for your work in Congress and before Congress in combating invidious discrimination. And as members on both sides of the aisle have expressed today, race discrimination, any kind of discrimination, has no place in our society. Certainly not in auto lending, certainly not in insurance or any industry whatsoever. I think what a lot of members have expressed today, and some of the witnesses as well, is that we all want to get at discrimination, stop it, prevent it, but we also want to make sure that we don't eliminate risk-based pricing so that every good driver in America, and there are many, most people are good drivers, are not punished because they are not credited for their positive driving records. And I think it gets to this idea of socializing risk versus pricing risk based on pricing insurance based on risk. Let me ask Mr. Lynch one kind of final question to summarize what we've been discussing today, and that is, would elimination of insurance credit scores undermine the risk-based pricing model?
Well, to the degree that you restrict the ability to use proven predictors of accident rates, you're going to have a less robust model. It's going to get weaker. And that's going to be, and that would be regardless of the variable that you were deciding to restrict.
And let's really get at the core issue here. The core issue is that some of the colleagues on the panel, they're making the argument, as I perceive it, that credit scores are a proxy for race. Do you agree with that or not?
Well, no, they're not.
And tell me why you disagree with the other witnesses on that point.
Well, when we look at it in insurance, we're told what is fair, and what you have to do is create a fair rate. And a fair rate is one that, as I said in my remarks, is one that is neither too high nor too low, nor overcharges nor undercharges a risk that presents themselves with a certain known risk characteristics. And all of that, of course, is silent, as it should be, to issues of race and income. So insurance companies do follow those laws, and so that's kind of where I come to my conclusion.
If we eliminated credit scores completely from the underwriting of insurance, would an African American with a pristine driving record be subject to a higher premium?
I have no way to answer that question because the industry does not gather information based upon race, so I can't say.
Well, forget the race. Would drivers in general, with good driving records, would they be subjected to higher premiums as a result of elimination of credit scoring, use of credit scoring in underwriting?
Well, most drivers have good driving records, and the people who have good credit scores and good driving records and are presenting less risk to the insurance company would end up overpaying.
Okay. Without objection, Mr. Chairman, I'd like to submit several items to the record. The first is the Charles River Report on Fair Lending. The second is a report on auto insurance affordability and cost drivers in Michigan. The third is a letter to you and to me from the National Association of Mutual Insurance Companies, the Independent Insurance Agents and Brokers, the National Association of Professional Insurance Agents, and the American Property Casualty Insurance Association. And the fourth is a statement by the National Association of Mutual Insurance Companies.
Without objection.
And with that, Mr. Chairman, I appreciate once again your leadership in holding this hearing, and I yield back.
Thank you. The chair now